We're back here at the Zurich Precious Metals Conference talking about something else that's precious, energy. Let's get an overview of the uranium markets here with Scott Melbye. Thank you for joining me, and I'm really looking forward to getting some insights on this exciting time in the uranium industry.
Peter, it's my pleasure, and thank you for having me on your show here. Obviously, at this conference and more broadly, uranium investors are very happy these days, and for good reason. The long prolonged bear market that uranium investors had to persevere has really come to an end, and we see nuclear gaining broad acceptance amongst policymakers around the world. Nuclear power growth is likely to double within the next 15 years, and we have a very severe structural deficit on uranium production. And I know that comes as a shock to many people because all we've been hearing is oversupply, overproduction. The market was characterized by inventories and oversupply, and now we're truly transitioning to a market that needs new production. And we don't have the inventories around anymore that will buffer the price increase. So it's not surprising. Uranium's up, 300% from the 2016 low, but has a ways to go. I mean, we're at $74 a pound today, which is beginning to get into the incentive price level for better mines like our operations in Wyoming and Texas, but we need a lot more mines like that, probably 8 to 10 more mines like that to balance the market in the coming years.
So the uranium price, like he's mentioned, has gone up multiple times from its lows, and you do not see this as a topping period. This is more of a level that we need to be at to incentivize new discoveries.
Yeah, and I think the last bull market we saw uranium prices top out at around $137, $140 per pound. But remember, even with everything that was going on then, we still had significant inventories. And so it did buffer how high the market would go. This time around, because of producer discipline, because of Sprott, Physical Uranium Trust, Yellowcake, and others that have bought uranium and taken it off the market, we've now rebalanced. So we don't have the inventory buffer. And remember, uranium demand is inelastic. Nuclear power plants must run their plants on uranium, and it's also a bit price insensitive in that uranium prices could double. And because it's only 5-10% of the production cost of the electricity, it doesn't price nuclear-powered electricity out of the market, which is very important.
So you have almost about 4 decades in the uranium industry, and not just working with uranium companies, but on the backside. So it gives a little insight. How does it work with pricing? Because it is a more unique market in that sense. How does the uranium price determine? How does the supplier and the buyer come together?
Well, it is interesting because we have the spot market, which is literally the cash and carry market of a buyer engaging a seller at a fixed price for a delivery probably less than 6 months into the future. That market trades 50 to 100 million pounds a year. It's not to be confused with uranium requirements, which is what the utilities use in a year. And total requirements for uranium globally is 200 million. We're only producing about 140, 150 million globally. So the rest has been made up by inventories. So if we're seeing the end of that inventory drawdown, we now need the new mines. So for new production, many producers are incentivized by baseload contracts. We're a very unusual industry. Unlike gold or copper or silver, which is very much a spot-driven market, uranium is a hedged market where producers and utilities sign long-term contracts. My company, Uranium Energy Corp, is very different. We choose to be unhedged. One, because we think we're going into this structural sort of scarcity market that hasn't been the case in recent years, and we feel that committing all our production at prices that kind of reflect the last 5 years and not the next 5 years is a mistake. So we're incentivized by higher spot prices. We've set a bar of $60 a pound, trading for at least 3 or 4 months. That's the signal we need to go back into production in Wyoming and Texas. For others, it might be signing a certain percentage of their output under long-term contracts.
So let's talk about the production side. What are the assets? You have two assets, primary assets, Wyoming and in Texas. What are the size of these deposits, and what exists in the company?
Yeah, so we've made close to $600 million in acquisitions over the last 2.5 years. One of them being Uranium One, we bought from the Russians. That was the controversial mines in Wyoming that were owned by the Rosatom State Atomic Energy Company. We bought that back from them just 3 months before the Russian invasion of Ukraine. So, very good timing to get that done, and we're happy to have the Russians out of Wyoming. For us, it means we have two production centers. We have a fully operational processing facility at Irigaray and licensed well fields in and around 50 to 100 miles from the Irigaray plant in Wyoming. That's why we call it hub and spoke. In Texas, our area of previous production, Hobson is the processing plant to Palangana and Burke Hollow. So between these two centers, we can ramp up to 1 to 2 million pounds a year each in both state, going to 5 to 6 million within 6 years. So with uranium prices trading where they're at, we'll likely make a decision in January to restart mining operations, first in Wyoming and then in Texas. And hopefully we're drumming yellowcake by July of next year.
Fantastic. So what sort of reserves or resources does the company have?
Well, all these acquisitions has had a tripling of our in-ground resources to 329 million pounds of uranium, 100 million of which is in the U.S. within 100 miles of these two processing plants. The rest is coming from Saskatchewan in the Athabasca Basin. We're a big believer in ISR mining and U.S. uranium production, but we believe the higher grade production from Saskatchewan and Canada being a very reliable jurisdiction, we want our focus to be Canada and the United States, and so we made acquisitions of the Rough Rider project from Rio Tinto. We bought UEX, which brought a whole portfolio of project JV interests and wholly owned exploration projects that are in our camp. We're looking to consolidate these holdings and produce a economic study by the end of the year that will tell us, all right, what do we have there in terms of consolidated operations? What are our milling options? What are the production rates? What are the costs? What are the development timelines? So, long story short, near-term production cash flow from Texas and Wyoming, and while we're doing that and we're throwing off free cash flow, we're developing our pipeline of Canadian projects. We're still going to be 6-7 years away from production, but in the process we can see ourselves emerging as a 10 million pound a year uranium producer and putting us in kind of the top 5 to 10 producers in the world.
I'd say relative to the other producers, that's really up there. So it's quite unique. And the industry itself doesn't have many options right now.
No, and investors are looking for larger cap options. Obviously, bigger institutional investors can't really trade down the food chain into the smaller producers. So now, being a $3 billion market cap, or sorry, $2.3 billion market cap, trading 8.5 million shares a day, we're getting into that mid to large cap range, which is very important for buyers of uranium in terms of our ability to supply uranium, but it's also very important for investors that they have another larger cap option in the space.
And it's more of a general question about the uranium industry and government support. There has been a general shift in attitude, even among the climate change activists and so on. They really come to see uranium as a green energy source. So how does the government now play into this? Are they being more supportive in your efforts?
So in my 40 years in the business, many of those years I've been involved with the Uranium Producers of America. I'm the current president, and so we're the lobbying organization for our industry in the U.S. So I've seen the political changes through numerous Republican and Democrat administrations, different changes in Congress. I've never seen such bipartisan support for uranium and nuclear power like we have today. And that's unusual. As you know, I mean, in the United States, Republicans and Democrats agree on very few things, but they do all see eye to eye on the role that nuclear plays in our energy policy, and a realization that a heavy reliance. Our dirty little secret in the United States is that 50% of the uranium that supplies our nuclear power plants that provide 20% of our electricity come from Russia, Kazakhstan, and Uzbekistan. Not a good situation with what's happened in Ukraine, and not a good situation too when we see the ambitions of China and their nuclear programs, and we see unrest, political unrest in Africa. We need to have more homegrown domestic uranium, and so there's legislation moving through the House and Senate that would expand the strategic uranium reserve and really provide a stimulus to get U.S. uranium conversion enrichment off the ground faster. And then I think the next shoe to drop would be invoking a full ban on Russian uranium, probably by 2027. But I think legislators want to make sure that we have our industry up in a healthy stage before we cut the Russians off. But we may not control that. Putin could cut us off tomorrow. So it's really important we regain that energy and supply security.
And that's very important right now. That's a very interesting insight that you're getting support from both parties.
Yep.
That now this has become a pretty important, significant issue. You did mention that nuclear energy growth is doubling in the next 15 years. Is that mostly coming out from China? Where is that growth?
Asia has been the emerging fastest growing market. Obviously, China is the biggest, will surpass the U.S. as the largest nuclear installed capacity by the end of this decade. But you're seeing it everywhere. In the Middle East, you're seeing resurgence in Europe and places like the UK really building out their next generation of nuclear power, whether it's small modular or big reactors. Finland's growing. Countries in Europe that said they were going to phase out nuclear power are now going the other way. Sweden, Belgium, Netherlands. In your part of the world, where you live in Central Europe, Czech Republic, Poland, Romania, all these countries that are trying to be closer integration with the EU. That's causing them to have to move away from their coal-fired power stations. But they can't then turn the other way to Russian natural gas. So nuclear is the natural fit. So outside of Asia, I think Central Europe, from the Baltics to the Balkans, really is one of the fastest growing markets.
Oh, that's very interesting. Really appreciate your insights into the uranium sector. We'll have to follow up soon with some more detailed interviews, because you're a wealth of knowledge. You really, we just really scratched the surface here. So look forward to following up with you in the near future, and thank you for your time today.
Great. Thank you, Peter. It's my pleasure.
Thank you.